As we seem to be saying almost every year, gilts have had a phenomenal rally. We've seen, though, immense volatility. We've seen the most volatility in gilts since the 2011-2012 Eurozone debt crisis, and before that you had to go back to the financial crisis in 2008. And other than that, it's the biggest moves in gilts we've seen this millennium. And particularly we've seen massive rallies in gilts. For example, in August alone, 50-year gilts rallied over 12%. Immediately after the Brexit referendum, we saw a very large rally in government bonds in the UK, and we also saw almost similar rallies in many other government bond markets as investors began to anticipate a wave of monetary stimulus and expected the Fed would not be hiking interest rates given the Brexit vote. What we've seen then since August actually is gilts having a massive rally as the Bank of England surprised markets and announced QE. We had a 40 basis points rally in gilt yields, particularly at the longer end, and yet actually very unusually US Treasury yields rose over that period. If you look at how far down the path the Bank of Japan is, and also the European Central Bank, where they are starting to come up against capacity constraints, where it's becoming difficult to buy more government bonds, I'd say particularly that's the case in the Eurozone, I think the Bank of England has a very long way to go until it runs out of gilts to buy. And bear in mind as well that as we're doing more fiscal easing, that means issuing more gilts, then that creates more gilts for the Bank of England to buy. So unless this QE program accelerates and runs for many more years, I don't see a problem with being able to buy enough gilts. As part of its QE program, the Bank of England also announced it was buying up to £10 billion worth of investment-grade sterling corporate bonds from companies which will benefit the UK economy. On the back of that, we saw a very big rally in sterling credit. But looking forwards, I don't believe there will be much more of a rally. The program hasn't really started yet, so we could get more of a squeeze. But if you look at what happened in the Eurozone when they started buying corporate bonds, all you saw was much more issuance. Not just from Eurozone companies, but also from US companies taking advantage of more favourable funding costs in the Eurozone. So I expect supply will also increase markedly and maybe even outstrip the extra demand coming from the Bank of England. People look at government bond yields now and they're very low historically, and in some cases close to or at record low levels. And many people for years have been expecting government bond yields to rise, and that hasn't happened. And the reason is largely that growth and inflation are just not rising. If anything, growth is getting weaker and inflation is staying at very low levels. And I think therefore that we're not going to see an end to quantitative easing or monetary stimulus. We're going to see more monetary stimulus. And this doesn't make me outright bearish on UK government bonds. I am thinking in terms of the UK specifically that there are better alternatives outside of the UK. We've started, for example, to buy US Treasuries instead of UK government bonds. But I think really having a global mandate where you can pick out the best value around the world makes much more sense to me. In terms of credit, we've seen credit spreads rally a lot. Again, partly this is because the ECB and the Bank of England are buying corporate bonds. But broadly speaking, credit spreads are not looking particularly attractive. We have been bullish on corporate bonds, but we're less bullish now. If markets rally much more from here, which is very possible, then we'd be looking to get outright bearish on corporate bonds.